Afternoon, Luke. Thank you for taking the time to speak with blockchain today. We have been following Deribit's growth for quite some time. And it's a real pleasure to have you with us. To begin, could you briefly introduce your personal background and career journey before joining Deribit? What led you to enter the crypto?
Yes, thank you for having me, first of all. What brought me to crypto? I started as Chief Commercial Officer for Deribit in 2019. And before that, I actually worked here in Singapore for Singapore Exchange for about 5 years. And before that, I worked around 5-6 years for a Dutch options exchange. And before that, again, something like 5 years in the Amsterdam capital market. So I've been around for, my first job was 2004, so 21 years. Pretty long time, out of which, let's say 15, 16 years exchange business. So I've been looking at traditional exchanges and options trading and futures trading since about 15 years. And when the crypto hype started, I was trading PA in 2016, 2017, and I realized the opportunity and the enormous chance in the overall space, which I wanted to explore further, and that led to Deribit at some point. So I joined in September 2019, and I'm the CEO since 2 years approximately.
Okay. Deribit is quite unique. The exchange, but not funded by Chinese, unlike many exchanges. So, in your opinion, why do you think Deribit can survive and succeed in this space? We know Binance, Bybit, OKX, and many other exchanges are trying to do capital options services, but they never got the market share from Deribit. I think it is very interesting because they nearly win in all the other things except the capital options. So what's the reason Binance did not beat Deribit?
I think there's a few reasons. We started in 2016, which was pretty early. In 2016, no one cared. So options pricing was Bitcoin was way more volatile than it is today. So options premiums were high. Market makers didn't exist. So dedicated options market makers weren't there. So the quality of the books was limited. But over time it grew. And in 2018 we saw professional market makers stepping in. We saw firms that were spin-offs of very large options market makers launching dedicated debts for crypto options. And over time, spreads narrowed, books were getting better and better, and we started building a name for ourselves. And the first hedge funds and small institutional firms started entering the space, and we gradually grew. And that head start has brought us a lot. So a lot of people are still come to Deribit because of our head start in the space. So we were first to enter the space, and we are always heavily committed to options. So everything we do is with an options hat, which means that dev resources, so all the resources the people we employ, the servers, so we have dedicated hardware in London. We don't have cloud, which makes us faster in terms of processing orders, in terms of offering features like multicast. No one else, like Binance, OKX, no one has multicast, which is like a low latency a binary data feed, which is like faster than anything else. We have market maker protection. We have a bunch of things that no one else has built. No one else needed to build it because they operate a big supermarket. So we are more like a niche operator, while all the names you mentioned offer many things. So if there's something new, the developers or the product managers need to fight for resources. And today we'll build something for spot, and tomorrow we'll build something for perpetuals, and the day after we build something for options. For us, it's always options. Tomorrow we will build something for options. The day after, it will be options again. So this options focus and mindset has given us a head start, but it's always made us better than the rest as well. Our product is simply a premium product because we do everything we can to make it premium. And that's what sets us apart. That doesn't mean that the other markets are not amazing, because they've done an amazing job in building a market. but we are more narrow. We have to sacrifice some parts of our business. We've never built certain parts. We don't have a big spot market, but we've built an amazing options shelf.
Do you think Deribit's leadership in crypto options is more about product tips, liquidity, or trust from institutions and professional traders?
Yeah. So if you what I just said is like how we built it, but this mindset of building a high quality product, getting high quality market makers involved, getting proper incentive scheme, getting market liquidity, getting market maker protection, getting all kinds of features in, make sure that the spreads are narrow, books are highly populated, but also means that on the non-trading side, so let's say regulatory-wise, we are VAR regulated, we have an offering that's suitable for the world. We have a setup that attracts institutional players. So we have, for example, SOC 2 Type 2, which is like a qualification of your operational and security methods, the way you work, which is like a quality stamp. We have ISO certification. We have audited financials. I don't think any of those exchanges you just mentioned have audited financials. I think we have them for 5 years now. All of those quality metrics set us apart from the rest. So after FTX, people go for quality and they compare venues. And if you're going to allocate $100 million somewhere, you want to make sure that it's safe, secure, and operated in a way that you can justify to your investors. And that's why they choose us. So I think we will lose, or we have lost on the retail side. So we have a complex product, but we've won significantly on the institutional side. So institutional investors represent approximately 85% of our platform. I think that will remain like that because we have an advanced product that will attract people that know what they're doing and not the retail masters. But at the same time, if you are from the traditional space and you will launch an asset manager, you will launch a broker, whatever, some sort of financial firm active in the crypto space, you will trade what you've been trading for the last decades, which is options and futures. So you will look for who's offering that, and that's us. So you want the quality trademarks as well as liquidity, and that's why they come to us.
Let's go to the next topic. We know that Coinbase acquired Deribit this year. Were there any other options besides Coinbase? I've heard that Binance, Bybit, and Kraken were also interested. Can you share more information? So why did Deribit make this decision? What were the key motivations behind it? Why not keep independent from a strategic perspective? What change should Deribit users accept after joining Coinbase?
Yeah, many answers to that question. So let me start with the beginning. Our founder was looking for liquidity, so he wanted to sell some shares. That's why we appointed an investment bank. We appointed Deloitte and a bunch of other advisors to make sure to manage the process. And over time, the market changed because of the Trump election. So instead of selling some shares, there was indeed interest to sell the full company. So multiple names, including some of the names you mentioned, were interested. I can't share the names because it's on the NDA, but there were alternatives. So why did we choose Coinbase? I think Coinbase is a listed entity, which makes the structuring of the transaction easier because they can pay in shares that have a value. You know what the value is. It's not a promise of future liquidity, but it's actual liquidity today. But perhaps most importantly is like the shared mindset. So Coinbase has an amazing product shelf already, absolutely dominant in the spot space, have a high quality mindset in terms of setting up the product. They do it the proper way, no shortcuts, proper licenses, a good balance sheet, and they want to conquer the world, and we want the same. So we have a product that's amazing, but it's not a big supermarket, as I mentioned. It's a niche product, and together with the products offered by Coinbase, we have the full supermarket. So we can challenge the leaders in the space by having an unmatched product sales, better and wider product sales than anyone else, and also start targeting retail and the users were not having. So together with Coinbase, the brand, the trust, the licenses, the balance sheet, and our added product, all of that together is very powerful. So why did we choose Coinbase? I think predominantly because of the potential there, but of course the financial component is important.
Okay. The next question may be tough. We have to say many users complain that Deribit's KYC process is too complex and even painful. How do you respond to this? With Coinbase acquisition, will KYC and compliance become even stricter?
So for the audience, my apologies, but compliance is essentially a terrible process. So you can't make it nice. We try to make it nice. We try to make it smooth, automate it as much as possible. But global rules are getting more and more strict. They will be more strict next year and the year after. So the question is, how do you how do you abide by these rules? And we want to make sure that we abide to the fullest, which means that you have to do enhanced due diligence depending on the source of funds. You have to, of course, ask for the source of funds. You have to ask for the proof of residence, and all of that with a language barrier. So for Chinese people, there might be issues that they need to translate it. Especially China is difficult because many of the government bills don't come with an address, are paid via WeChat or something like that. So it's unlike global standards where you have a bank account and a statement with your name and address, which can serve as a proof of address. So China in itself, but globally, it's getting more complex. So will that change after Coinbase? Coinbase has the same rules that apply to us and apply to anyone else. The more global you get, the more difficult it becomes to abide by all the rules. So Coinbase is a global company, so of course the rule set is difficult. We have received more complaints in the past about Coinbase, and Coinbase has created like a task force addressing these problems. And I think, I'm not sure about the percentages, but whatever, 90% of the load is gone, and the process has been automated and way more smooth. And if people complain, I think you have to wait for an hour instead of a week. Forgive me for not having the actual numbers, but the trend is correct. So will it be annoying? Yes. Will the questions be addressed quickly? Also yes. So we will try to make it as smooth as possible, get rid of all the hurdles. There will be some remainders, but if you mail us, if you mail Coinbase, if you reach out via the regular channels like Telegram chat or Twitter or whatever, we will get it addressed. But the clients will need to be aware that standards are increasing and that it will only get worse. The goal is to a certain quality, so it's getting worse for a certain reason. You want to make sure that in order to make blockchain, make crypto like a global adopted payment solution, you need to make sure that the transfers are accepted globally, and that a Chinese user can transfer to Europe, can transfer to, and that means that vast firms like us that process these transactions have to verify the client, have to verify where the funds are coming from, have to verify the destination, and have to make sure that the entire route is ticked off, which is operationally a hassle, but will get smoother over time when all the VASPs, there's hundreds of us, adopt the same standards. And that means that the agents in the middle, the people that we send messages to, can you please confirm that the identity of this person? If the VASP responds, then it's all fine. The problems occur that if the VASP doesn't respond, that there's a mismatch, and then we need to manually look at stuff, and that takes time.
Okay. After joining Coinbase, will you ban users from some places like China or Hong Kong? How do you balance the trade-off between strict regulation and the good user experience?
Yeah, good question. We won't ban. So we only ban the countries that we already banned, which is the standards list that are banned globally on many exchanges, but China and Hong Kong will not be banned.
We have recently seen the result of on-chain futures platform like Hyperliquid. How do you view this on-chain? Do you believe that in the future a decentralized options platform could challenge the dominance of centralized exchanges like Deribit?
Yes and no. I think Hyperliquid and many of platforms like it have done an amazing job. As in UI, trading, liquidity, it's pretty impressive. The problem, I think, is that there's one that's really successful today, serving, let's say, 10,000 users, and there will be another one really successful tomorrow, serving the same 10,000 users that will get an airdrop from the new platform tomorrow, and that will move to another platform the day after, which makes the loyalty to those platforms pretty low, which also makes the institutional adoption pretty low, because you have, in order for an institution to start trading on this platform, you have to do all these checks and KYC and making sure that you know who you're trading against and all the mandatory checks as a large global institution. If the clients will start moving there tomorrow, that means that you have to do the next one and the next one and the next one. And I think for that reason, many firms in the institutional space will not adopt DeFi, simply because the amount of effort it takes to start trading on one platform is not worth it, because the stickiness of the users is not proven. So the institutional adoption will be low, and the second reason, or perhaps the most important reason, of course, is the lack of KYC. So if you don't know who you're trading against, and like mentioned before, the increasing load of international legislation forces these large institutional international firms to avoid DeFi. So will DeFi have a shot in the long run? And yes, I think so, because it's an amazing solution. Will it be adopted by institutions? No, I don't think so. Doesn't mean that it therefore ends. No, I think it will remain successful. I think it will remain moving. So there will be another one tomorrow, and I wish Hyperliquid all the best. But the question is, how long will the users stay? Will there be some standardized model in the future? Potentially, if the KYC element is sorted, if people know who they're trading against. Is that happening today? Don't think so. Is this a miss for the centralized exchanges? Yes, I do think so, because these traders that are trading actively on these platforms, they could have traded on Deribit or on Binance or whatever platform as well. So perhaps the reason is that we can't service these people. So it could be US persons, it could be other people that we can't service, or these people simply trade because of liquidity or the service offered there. The reality is most likely a mix of both arguments. But yes, I think in the end, we together all lost some market share because of the success of the DeFi space. Which is not bad. It's like an amazing new thing, and it's market evolution. So I wish them all the best. I think it's amazing what they've built, but they serve a different client base. Our institutional clients will not go there most likely, which means that the market will attract a different crowd. But both can live simultaneously. So I don't think there's a world with only DeFi or only CeFi. It will be both.
Okay, looking ahead, what is the next strategic focus for Deribit? Will it continue focus on the options sector of centralized exchanges, or will it make some other layouts and innovations? Will it deeply integrate with Coinbase, or will it maintain a certain degree of independence?
A bit of both. So we will be the international arm of Coinbase. So Coinbase wants to conquer the world, and we are one of the tools in their toolkit. And I say there, but it's actually our toolkit now, because we are one platform nowadays. We are, practically speaking, not one platform yet, because we are, as you mentioned, like standalone. Will that change? Yes. So we are slowly merging into the overall Coinbase organization, but not the US part. So you have to look at Coinbase from a US angle and a non-US angle. We will be the non-US angle. And who knows, we might be able to access the US at some point, but we will be the international arm for Coinbase. What that means is that we will focus on options, but we will also try to focus more on other products. So we are widening the product shelf. And together with the products that Coinbase already offers, we hope to have like a fully complete set of products. What does that practically mean? It means that we will, for example, offer Coinbase Spot to our users. So Coinbase Spot is an amazing, high liquid platform. Our spot market is tiny, so we want to integrate with Coinbase Spot and offer our users like the amazing liquidity Coinbase already has. Vice versa, we want to offer Coinbase the options liquidity we already have and which they don't have. So all of these integrations are being whiteboarded as we speak. So When, what, not exactly clear, but the plan is over the next year to roll out all of these integrations.
Okay. Do you see Asia, especially Hong Kong or Singapore, playing a bigger role in Deribit's expansion?
I think Asia is crypto-wise an amazing opportunity. So not only the retail users, but also the family offices, the hedge funds. I think the crypto, or perhaps the overall risk appetite of investing and trading in higher risk assets is higher in Asia than the rest of the world. So yes, I think there's more opportunity, but also we need to look at it from a license perspective. What can we do? What can't we do? Where can we have people? Where can we not have people? So we're looking at how to best address this.
Okay. What is the work culture like at Deribit, and how many employees do you currently have?
How many people?
Yeah,
we have 175 people. And Coinbase has, I don't have the exact number now, but together with Coinbase we are approximately 4,000. So we are 175 out of 4,000. A lot of them are in the US, but Coinbase has quite some people here in Singapore. They have people in India. They have people in London, and the rest would be US, East Coast and West Coast. But so Deribit only has like a limited group. We have a fairly big office in Amsterdam, so a lot of the tech work, development work, servers and systems and all of that stuff is done from Amsterdam, security. So we will always have a big hub there, but the big hub has become relatively small versus the big hub Coinbase has in the US. So we will work together where we can, and we will do things standalone where we should.
Okay. As a CEO, what has been the biggest challenge for you personally in leading Deribit? If you had to summarize Deribit's core competitive advantage in one sentence, what will it be?
So I think the biggest challenge over the years, so I've been around since 2019. We've had our fair share of issues over the years. Technical issues. We've had 3 Arrows as a shareholder, so bankrupt shareholder. We have a few of those situations which, of course, have a financial impact, but also people impact, regulatory impact, legal impact. You have to sue people, etc. So that's been like a bumpy ride over the years. We've learned our lessons. I think we've been, during those days, too friendly towards clients, giving them more credit than they would deserve. But I think it's a wise lesson learned. So painful but wise. So we've grown stronger after it. We've changed our policies, and you could argue that we wouldn't be in this position now with the qualifications I mentioned earlier, like the audited financials and all of that, SOC 2, without having experienced that. So perhaps it's like something every company needs to learn. You improve your quality of your service offering by also stress testing it, and we stress tested it heavily over the years. So I think that's like the biggest lesson learned. Going forward, I think what makes us strong and what makes us a good quality product is the product itself, but it's also the way we've always treated our clients. So as mentioned, we were not perfect. There have been technical incidents, mistakes, but never at the expense of clients. So we've always been friendly, we've compensated people, and no one has ever lost because of our internal struggles. So I think having a good product and a credible team with good relationships with the clients is the package deal that Deribit represents. And going forward, the product will change, but the way of operating won't. We will remain strong. We will keep offering a high quality product, but we also put the clients at the number 1 position and make sure that they are served best.
It's been maybe 3 years for now until we do each other, right? So I just want to ask some. I just find something that for the options now you have some powerful competitors in the market like IBIT. I just found news from Bloomberg, and they said that the IBIT had just surpassed the Deribit in the options open interest. So do you have so many plans to just fight for that, or maybe just some plans to just improve the options, improves liquidity, improves the fees, or maybe others? Yeah.
So first of all, we've had like record months, the best months in Deribit history ever. So if you look at 2025 or 2024 for that matter, we've seen records after record after record after record. So the growth of IBIT is like an amazing thing. It's US retail trading crypto options. Perfect. It's something we can't offer. So we wish them all the best, because all of us together develop the industry, develop demand, develop the product, and they've done an amazing job servicing a country that was underrepresented thus far. Many wanted to trade, we couldn't onboard them. Finally, they have an opportunity. So I think it's amazing what they've done, but it's not at our expense. So we've had record after record after record. So our market share is untouched. So we have around 75-80% of the open interest still. So there's many competitors, including Binance, OKX, including CME, and we are still number one, undisputed. What happened is that a different product, so ETF is a wrapper, it's a dollar-based product. We have a Bitcoin-based product, so it's not like for like, but it's a similar, let's say, family. It's someone else in the family, not the same product, has done well. That means that there's now two possibilities to trade. One is the offshore market that we service, and the other one is the wrapped version that IBIT serves. So both of them growing at the same time only stresses the opportunity we face here. And Bitcoin is doing well. We're seeing new all-time highs, and I think we will continue seeing that. So there will be more demand simply because the market is getting bigger and bigger and bigger. And of course, the entire market needs to be able to access the product for it to grow. And if what you've seen over the last years is that the US audience was not able to participate, and now they're recovering. So the fact that they've done well is good for us, because if they do well, we do well, because there's several market makers that trade the same products, right? So in the end, pricing is comparable. So you could trade there, hedge on Deribit, and vice versa, which means that there's new arbitrage flow being developed, flow that didn't exist before, new trading opportunities, which attracts new players. So all of us benefit. So I think the Bloomberg article suggests that it's at our expense, but it's not. It's, I think, actually helping us. So if they grow further, I would be very happy, because that means we grow hand in hand. If it crashes and they would lose 50%, it would hurt us. So I'm happy with this trend.
Right, great answer. And the next question is about the products, because most until now about when I just traded in the derivatives, most of the products I trade is only the Bitcoin and Ethereum options. But for now, when you just in the trap jam, the gold just hits the 3.9K, and maybe it's close to maybe just surpassed and reach the 4Ks this week. So do you have some, just some plans to just add more offshore underlying assets like the gold, silver, precious metals index, and others? But I think the gold silver maybe will be very popular for now.
We tried gold. We actually stopped. So we've had gold for like a year or so.
Yeah.
During the time it reached all-time high, we can't get the demand active on Deribit. So where I see the biggest opportunity would be more digital products. So we have XRP, we have Solana, but we're looking at adding more and more names. So I think if you look at any traditional exchange, it would be HSI or whatever, some tier index, A50, and then the single stocks. I think you should look at this in a similar way, where BTC and ETH would be the tier one products, but there's many other products that are suitable for trading. And we might need to incentivize market quality a bit in the first 6 months or so, but then we can see how the market develops. I think if you look at the opportunity, the opportunity is biggest there. Once you have those, you could argue, let's make an index out of this basket and offer basket products to clients, so index products. where whatever top 10, top 5, top 20 doesn't really matter, but giving clients exposure to a weighted basket of top names. The big question is, should you bring the traditional system to crypto as well?
Yep.
Like the traditional players are importing crypto in their offering, or should you focus on being the best of the best in what you do? I think for now, at least our first attempt in getting gold was not successful. You could argue we could launch options on stocks, options on, let's say, Tesla or whatever that people trade, using your Bitcoin or your Bitcoin options as collateral, offsetting stuff. Not sure how that would pan out. Also, the fact that the traditional space is closed for 2 days a week. That means that there will be liquidity concerns over the weekend, etc. So yeah, we're exploring a variety of products. We just launched Bitcoin and ETH linear, as in we have what we call inverse, which means Bitcoin or ETH as collateral, as pricing for your Bitcoin options. Now we launched USDC-based options, which makes pricing and the payoff slightly easier, and will also unlock rewards for clients. So you get 3.85% at the moment annualized, which is kind of interesting and triggers all kinds of new trading strategies as well. What will the future bring? I think more of both, hopefully.
Great. And a sub question about that. So you just said you will be focused on the Bitcoin and Ethereum options, right? But for the Bitcoin price has just surpassed the 100K. So for the old minimum contracts, they 0.1 Bitcoin maybe it's so bigger for now. So maybe do you have some plans to just maybe try to
we're looking at that, reducing it. Yeah.
Great. I'm just waiting for that because it's so expensive.
No, you're right. So we launched the linear ones with smaller contract sizes, and we're looking at whether to do the same for the inverse ones.
Great.
You would welcome it.
I will try it. And for the expiration dates, do you have some plans to extend expiry to more than 1 year? Because for the traders, like someone want to just treat the LEAPs options. Because we're just trying to have some plans to base some structured products based on the LEAP options. But the only choice for us is only the 1 year options. Maybe you can just try to maybe more than 1 year to have some plans like the CME has done, maybe just two years, maybe 3 years, maybe more.
So the question is how you would offer this. So yes, we get occasional questions. If you look at liquidity and if you look at volumes, it's highly skewed towards the front months.
Yeah.
So let's say the first quarter would be most traded. Institutional firms, structured products tend to use 6 months as well, but the 1 year is already like a small percentage of the overall volumes. 2 years will be even smaller. So I don't think we would offer it as a quoted segment. But you could argue that we could list it on an RFQ basis. So that market makers don't need to quote all day long, but if you want to trade it tomorrow, you hit the RFQ button, we'll get your pricing, and if you like the pricing, you can trade it. So then at least you have the exposure, but you don't have the guarantee of constant liquidity because the market makers are simply not willing to quote 24/7 if no one is going to trade it. So what we're considering would be an RFQ segment, a bit like what CME has, for example. Many of the products they have don't trade or don't have quoted prices.
Great. Because most of for the LEAPs options only for the structured products, only for the long time wealth management. So they maybe just RFQ is enough for that. But for the swing trading or just in-house trading, maybe the front months and some back months is enough for that. Yeah. Great. And the last question is about just for some precious things, not gold, not silver. It's just like what do you think why Deribit is Deribit? In my mind, I think that's one of the precious for Deribit is its institution system. It means that all of the institutions we can just in your side events, all of us just sitting there and talk about market, talk about some collaborations, and talk about lots of things we have experience in trading. Yeah, but for the Binance, for IBIT, they have no. They have no environment, like it's just only QLs and beautiful goals. That. So do you think that's the main reason? One of the main reasons that the Coinbase chose you and you chose Coinbase, right?
It's one of the main reasons. Yes. So what I mentioned before, the similar mindset.
Yeah.
That's what we share. So also in terms of growth, We want to do it the institutional way. We want to have quality. We want to have best-in-class risk systems. We want to manage for all kinds of situations, stress test the system, do it in a regulatory compliant way, check all the boxes with KYC, even though it's a nuisance, but do it properly. And that mindset means that we have a different hardware setup, different software, different product range, different KOL partnerships, different retail offering, and that sets us apart. Yes, and I think Coinbase has a similar mindset. They behave the same way. They have institutional people. They have people with backgrounds in banks and brokers. And I'm not saying we should only hire brokers and market makers, but you should have both. And that's, I think, what makes us strong. We have a combination of these people with experience from before. So they've built a track record in doing stuff a certain way, and that's why we hire them.
Great.
Okay.
That's the last question. Thank you.
Thank you.
Thank you.